Good afternoon, ladies and gentlemen. Future here of FutureMeDead.com. This is going to be part two of our analysis on natural gas futures. I received a question from one of my subscribers as to whether we have reached a double bottom. Now, if you recall in the previous video, I'll post a link on of the first video below. We were looking for a minimum price target of 168.4. I was looking for a minimum, an attempt to form a double bottom. So the operative question is this an actual double bottom? Is this a lasting bottom? And are we going to rally from here? Okay, in the previous video, just to give you a small recap, we had identified two potential wave counts. The first was that we had a leading diagonal. This is this wedge formation here in a wave one, which would allow for a retracement back up into the fib zone. Let's just say 50% of this decline in a second wave before we go lower. So that was the least bearish count of two wave counts available. The other was that this was a series of ones and twos coiled to the downside, and I specifically said that this more bearish wave count, that is 1 2 1 2 1 2, would call for an immediate decline lower. Okay, and that is what has happened. Okay, there hasn't been any material rally to the upside, corrective or impulsive. So we can now eliminate this wave count. We are now looking at this decline as a simple impulse wave that is simply subdividing lower. So if I were to ask you, what does this structure look like from top to bottom? Let me rephrase that question. Is this a completed impulse wave to the downside? The answer is a clear no. Okay, this is not a structure that encompasses a completed 5 waves to the downside. Instead, we have a third wave structure that is subdividing lower. Okay, one of the things I've learned with Elliott after practicing it for 10 years is never get in the way of third waves. So the wave count is as follows. This is a wave 1, wave 2 of minor degree. Then we have a smaller wave 1 and 2, and a potential end to wave 3 here, forming a temporary double bottom, which should lead to a fourth wave bounce that should prove to be corrective. Let's put that in red. Okay, let's continue. Now, the first thing I want to do is let's identify invalidation for this wave count. We know wave 4 cannot enter the price territory of wave 1. So we will draw a horizontal line, and we will say a move above 197 would invalidate this wave count. That would be unfortunate because there is a high degree of clarity as to what is going on here. We are basically looking for lower prices, and we are looking to sell strength. The only thing that would throw a monkey wrench into the bearish bias is an impulse wave to the upside. We don't want to see a 5-wave structure. We want to see 3-wave structures. Okay, and we know where the line in the sand is, at 197. Above 197, and it would move us from bearish to neutral. Okay, let's talk about resistance. We always want to look for the fourth wave of 1 lesser degree as a potential stopping point for corrective rallies. Okay, that level comes in at let's see, that's 184. Call it 184. Okay, there are other potential stopping points. Let's use price history to look for other potential levels. $194 is certainly one of those levels where it has provided support on various occasions, resistance. You can see here provided support and then resistance, although it is uncomfortably close to wave count invalidation. So we don't want to see a move back up to 194. In fact, I'm gonna get rid of it just to calm my nerves. You know, whenever you're in a position, you actually have money in a trade, managing your emotions is very important. This is why you'll hear very often analysis and trading are two different things, and more often than not, the better traders are a master of both. So we're looking for a rally back up to 184.8. I think I even stated this for quite a while that I am looking for a three-way structure. Now, if you are short, what is the right thing to do? Is it to close your short and book profits now because we're forming a potential double bottom and go long, or should you hold and wait for a three-way structure, add to your position, or just simply continue to hold depending on whether you have a full position on or not? That is completely up to you. Me as a conservative trader, if I am short, okay, based on the previous video, uh, anywhere up here, anywhere above 197, I'm just going to continue to hold. Yes, this is going to eat up a portion of my profits, but if I am patient and I see a three-way structure, I'm gonna be okay about it, okay? Because I know where I'm wrong, and I know that under this current wave count, we are eventually going to give way to lower prices. Once we hit lower prices, then we can adjust our stop loss. Remember, you always want to identify your risk, set your stop there. Um, Either via account management or wave count invalidation. Step two is once the trade starts to go your way, move your stop loss to break even and then move it higher as the trade moves along so that you can maximize your profits. The idea, for example, to liquidate here because we have a double bottom is something I would have done in the beginning of my trading career. But it is a little cowboy more often than not. And more often than not, it's very likely that if you terminate your position here because we're expecting a three-wave rally, well, who's to say wave three isn't going to extend lower? Okay, so I would rather just simply be patient and let the wave count tell me what to do with my position. Um, Okay, moving forward, I also want to add just commentary with regards to the corrections within this wave 3. As you'll notice, the reason I'm saying that this is only the possibly the termination point of wave 3 is because we haven't had a rally in terms of price and time relative to this rally or even this larger rally. So one is certainly due, okay? Once we have a three-way structure potentially towards 185, then we can say wave 4 should be terminating in the area of our target, and then we can look lower. Let's talk Fibonacci targets now. A common target for wave 3 is the 1618, so let's put that on the chart. Okay, although shy, the low is in the proximity of 1618, so this does satisfy the wave relationship between waves 1 and 3 for me personally. Um, so if we are going to rally, let's look for a Fibonacci relationship between waves 2 and 4 and a simple retracement of wave 3 for a target zone. We're going to use a regular fib tool. Let's draw out the length of wave 3. And a common stopping point is the 38.2% Fibonacci retracement. You can see that very nicely comes in right at 185 as well, which is the where the previous fourth wave of 1 lesser degree lies. So that's really good. It also stays under this middle line of this parallel trend line, which we can see on various occasions has provided support. Okay, so we should now expect it to provide resistance. Okay, so far there is a confluence of resistance based on these techniques here, combining technical analysis and Elliott wave. Now let's look at a relationship between waves 2 and 4. So we will use our trend-based fib extension. The platform I'm using is TradingView. Just you can check them out at tradingview.com. If you're using in other platforms, more often than not, this tool is simply called a Fibonacci projection tool. Okay, so we will draw out the length of wave 2 and project it from the low, proposed wave low of wave 3. And what we're looking for is equality. Interestingly enough, once again, comes in right at 185. So there are 4 technical analysis studies, 4 items, 4 things that are pointing to 185. At this point in time, I want to say 185 is stiff resistance. I would be surprised if we go above it in a material fashion. Okay, so if you're not short, this would be the area to go short. Now is not the time. Okay, from there we can complete a wave 4, and then we can expect a new low in wave 5 to only complete wave 3 of minor degree. Okay, so one step at a time. The bias continues to be bearish, although at this point in time, allow for a 3-wave structure in wave 4. Okay, guys, that's it. If you guys have any questions, please leave a comment below. Check me out at futuremedead.com, and if you'd like to send me a message, I'm always on Twitter at futuremedead. Best of luck.